Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Nikola, ticker symbol NKLA. And so here I am recording this on Wednesday, April 10th, during market hours, and we can see that the current price is currently trading below $1 a share, being down almost 3.5% on the day after closing yesterday on April 9th at a price of $1. So, is that going to be the last time that we see Nikola closing above $1 per share? Or, are we going to reclaim that level? And so, what I see in the chart right now, while we have not closed yet for the day, we do see this pretty big wick up hitting a high so far on the day of $1.01. That does suggest to me that we will not be able to close above $1 a share. But of course, the market could turn around the last couple hours of the trading day. Who knows? But what I see, what does seem more convincing to me, is a return to this 382 level here, marked at a price of 93.3 cents. And actually, so far on the day, the low is 95.16 cents. So we are holding above that. And I do think it would be good if we did pull back to that level. I think it would be good for us to hold it as support, as we did pull back from $1.15 hit on April 1st. We did pull back to the 50% level here at 86.6 cent. And so we did then move up to above the 236, above $1 and 1.6 cents. If we do pull back to the 382 and hold that as support, that would suggest that we are putting in higher lows, and that could mean that the stock price is really just consolidating before the next leg up. However, we're not seeing higher highs, we are seeing lower highs, and so that might not be so great, but we are also seeing lower highs in the RSI, so there's no bearish divergence there, so I do think that is good. If we do look at the lows, if we are to put in a higher low in the stock price, that would mean that the price could be going down more to the 382, and the RSI as well could be going down more. And so this low here corresponding really with the dips over here, that was on April 3rd. The RSI was about 60.12. And so currently it is 61.66. So, the trading day is not over. But if price does drop more, but does not go lower than the low hit on April 2nd, which was 86.15 cents, if price doesn't go lower than that, but the RSI does dip below 60, that would then be bullish divergence, hitting lower lows in the RSI, but higher lows in the stock price. And that could suggest that the bottom is in. So I would look for the price to hold 93 cents. But if it does dip lower than that, we do not want to see price going below 86 cents. And that does correspond roughly with the 50% level here. And then I do have this yellow line marked at 85.5 cents. If we do look back, that is a historical level. I believe a low, yes, that we hit here, consolidating here in September of 2023 before this big move up. Did almost get a retrace to that here on November 10th, but then we did gap below it between December 6th and 7th, consolidating above it here before breaking below, getting an attempt at that level. And so, it does seem like it is a significant one, and we did get a wick down to it here. So if we are not putting in higher lows in the stock price, it is quite possible that we do consolidate right around 85.5 cents. And so I would look for some volume to be stepping in there for some moves higher and potentially to reclaim $1 a share. But unfortunately, I do see that for the trading day of April 10th and really the remainder of this week, I do think price will reside below $1 a share, or at least close below $1 a share, but we might be reclaiming it next week. So do look for either 93 cents or 86 cents, or really 87 cents to be holding as support. But if we do break lower than 86 cents and get a close below 86 cents, especially if we get two closes below 86 cents. That would suggest that further downside is likely potentially going to 80 cents here, marked by the 618, or the 786 at 70.36 cents. That does also correspond with this orange level that I have marked at 70.5 cents, again a historical level, and that does correspond with the bottoms that we saw here before dipping lower, breaking lower, and then moving a lot higher. So, it is possible that 70 cents will be revisited, but that might serve as a higher low from this level, and that could be a good dip buying opportunity, especially if price is retracing to these levels before earnings coming up about a month from now on May 7th. That could be a catalyst for some further upside, reclaiming $1 a share. But in the meantime, we might be seeing some discounts. So do keep that in mind, especially if we are not able to get another close above $1 this week. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.